Hey, good morning, everybody. We will be starting momentarily. Please hold on, just allowing everybody into the webinar here. Good morning. This is Scott Ebeling. I'm Director of Pricing and Strategic Solutions here at Box. And thank you for joining the Box Monthly Webinar for June. With me today is Allison Coldeway, our Senior Analyst.
Hey, everybody. Welcome.
Today, we will start out with Allie talking about Box and all our attributes we have, and I'll provide a market update. Then Allie will go into the ESG overview and a tutorial on community solar. Finally, I will close it off by briefly discussing our strategic solutions offerings. If you have any questions, please submit them and we will get to them as many as possible as we can at the end of the call. Take it away, Allie.
Perfect. Thank you, Scott. Okay, so for those of you who aren't familiar with Box, may not be a Box broker yet, I just want to introduce us and our company. Box is a master energy broker. We help independent energy brokerages nationwide help offer better service to their customers. We offer a proprietary platform that allows you to find, import, and quote and contract a customer within really minutes, as well as a robust suite of more sophisticated offerings that we'll get into a little bit later. Our brokers, as you can see, represent a massive amount of business, over 12 billion kilowatt hours, 214 million therms, and over 63,000 power and gas accounts nationwide. We're licensed to serve in every deregulated market in the US. As you can see, we have both natural gas and power options available. We've got in the green, just natural gas only, limited. And then in the blue, we've got both power and gas options available. We've also got that gray section with limited availability. Generally, these are larger natural gas transport customers, and availability can depend on rate class. It can also depend on just how many suppliers serve that market period. But regardless, it's something that we want you guys to know is out there. It's a definite opportunity, and we're happy to take a look at any opportunity, see if we can help any customer in any of these states. We work, another big part of our value proposition is our relationships and our resources. In addition to that licensing that we provide, allowing brokers to serve customers outside of maybe where they're licensed. Maybe if you're only licensed in Pennsylvania, you want to get into something in Massachusetts, we can definitely support that. The other way that we can support you is by working with and equipping you with all of our relationships with 90+ top suppliers in the industry. You guys probably will recognize a lot of the logos. You've got your Direct Energies, your Reliance, Engie, Shell, Hudson, a lot of your big companies, Constellation. But we've also got good, solid companies, Vistra, USG&E, SFE, and some of the other brands that are really specialized in mass market customers. So what I want to point out here is just the breadth of our portfolio when it comes to our partnerships. We've got a ton of relationships, and we're willing to put those we want to put those relationships to work for you. So if you're not a box broker quite yet, feel free to reach out to us. There's an application on the website. If you are a box broker and you would like to learn more about any of these markets, price with any of these suppliers, reach out, let us know. We'd love to hear from you. And that's, I think, really the primer on who Box is. And I think we can probably get into our market update unless Scott, you'd like to highlight anything.
Thank you, Allie. And I also want to also add to this that Nellie was 90 top suppliers. Actually, you might even go over 100 now. We have to do another count on this, I think, for the next webinar. But we also are partnered with many, community solar developers, with on-site developers, with energy efficiency providers. We're partnering with many others, not just suppliers, but also vendors in other ways that can be help and be service for your customers. So right now, go to the market update. And as always, I'm going to talk about, read this first slide, you're going to see it every time. I'm going to talk about why do we talk about natural gas and the importance of natural gas prices. And just a reminder of why that is and why we talk about this when we're talking about electricity, because natural gas fundamentals really equal most of power fundamentals. You look at these charts here, you see natural gas since 2010 up until now, it's just taken over as a fuel that's on the margin, the one that's really producing most of the power throughout the country. And you also see here, this is a correlation between natural gas prices and power prices. And it's PJM West hubs. It just take it the east side, and then you just take a look here at North hub. And this is normalized, taken out February 2021, or else this chart would be I'd have to have like 6 pages for this to see the top of that. But so we normalize that out. You just see it's pretty much steadily moves along in tandem there. So with that, now we're going to talk about natural gas prices and what's been going on. And you see this is a chart here of July 22 through to June 23 strip. So we look at a year out and how has that performed over the last 2 years, that strip. And this is mind-boggling. You see this around 250 2 years ago for this strip, and now we're pushing over $8, and it keeps going up and up and up. And you see these movements where we have these dips, but it keeps moving up, and it's higher highs, higher lows. That is a bullish trend market. Higher highs, higher lows, and it keeps pushing that higher. We don't know where it's going to end. We could be at the top right now, but it also could go up to $15 and $20. We'll be discussing that. And here's a big surprise here. A lot of people, all this talk here of crude oil, and how much it's gone up and how much the costs are. But these are the three really big of the main commodities out there, the three biggest movers. And crude oil is third. Wheat is number 2, actually. But look at natural gas in a 1-year change, 239% movement in natural gas prices. And this is blowing this away. You don't see this in the headlines every day because everybody buys gas. They buy their sort of gasoline for their car, and the headlines are like, oh, it's $6 gasoline, da 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 da. Well, really, what's having an even bigger impact on budgets, especially for corporations, but also for individuals now, is if you live somewhere where natural gas is a big part of your bill, the cost difference of what you're paying in natural gas is even more than probably what you're putting in your car right now for crude oil. And it's surprising it's not there, but this is kind of a little fun fact here for you of how much bigger that natural gas has even been in crude oil and wheat, and hasn't been getting those headlines. So then if we move on here, I'm going to talk about rate of natural gas curve. And what this shows here is these are where the prices are at for each of the months from really next month, July 2022, all the way out to December of 25, so the end of December. And it just shows that like how much more higher the prices are for the beginning of the next like 12 months out through like March, April of 23 versus years beyond that. But this line in that back keeps moving up as well. And the size of that move is almost starting to correlate with the size of the move in the front. You know, so it's quite interesting what's going on here. And if you see this, this is now going into what is generally determined in trading world as a widowmaker trade. This is the March-April trade for next March, April. And this is it shows a difference between natural gas prices, and it shows really more of a fear of of going into March without enough storage in winter gas storage. And because March is going to spread out from April, when April starts being an injection month, so you're not going to run out when you have injections coming in. But you know, before you hit that injection period, can you run out? And this just shows that fear, and we're pretty much at the tops here. We closed at 208 yesterday. I think the top is 213, which is back there at the end of April. But again, this keeps trending, starting to trend a little higher here as well. And with that, let's move on to some prices here. These are calendar strip prices around the clock for power. So it's around the clock for power. This is on or off peak. It's combined on and off peak. Gas, we're hitting around 647 now. 2 months ago in 2023 gas, this had a 4 handle on it, so in a $4 level. 24 and 25 with 3s in front of them. And now we're pushing, you know, 6.5 and 23. We're hitting up near over 5 and 24. And you know, I would be surprised if we're over 5 in 2025. Those were in the 3s 2 months ago. And people are just waiting, thinking there's going to be a bottom. But you know, these markets out there are still relatively fairly valued, and we're going to get into that some more. I mean, and really, in all honesty, I think the mid-4 is the new bottom normal, considering all the fundamentals that are going on. So almost like a risk-free, not trade, but so to speak, to put on to cover your position there. But ERCOT, PJM, New York, you see them all. They're all this, this isn't the $20, $30 levels we were having 2 years ago by any means. And here's a price change over the last month. You see Henry Hub gas up $1.22 in 23, 86, 69, and you see the power as well. Little relief there in PJM New York for 23. I think we got a little over our skis there on the heat rate levels. Heat rate being the power price divided by the gas price. And some index prices weren't really, I wouldn't say weak. I wouldn't call the 50s and 60s weak, but they weren't as strong as expected on some days. So it kind of brought that down a little bit, the temperament there of those prices. And here we'll pop right into it. This is a slide here. I just want to show this first before I start showing the storage and why we're in the projection. This is the seasonal temperature outlook from the National Weather Service. This isn't somebody trying to sell their bullish position and come out with this bullish weather position. This is from the National Weather Service. This is official stuff. And if this comes in like this will be in the top 10% of warm, hot summers over the last 150 years. So if this comes in, we will be hitting likely even maybe below our targets here for where we expect storage coming in the next year. And we'll get into that right now. So here is the storage levels we are at currently. This is the arrow here, this black line here at the end here. This shows you where we're at on that curve, and we're just staying slightly above that 5-year minimum. But if this comes in, we're expecting we'll be coming in more closer to those lows than the 5-year minimum easily by the end of the year, which those levels will be 31.67. This is kind of a historical build from here over the last 5 years. From these levels, if we have a maximum build, then that would be a pretty cool summer. We get 37.64. That's very likely in doubt if we'd even come close to that. There's a 5-year average and a 5-year minimum. We actually think that there's a possibility we come in if this kind of summer, we can come in that right around that 3,000 level, which could end up being a very scary situation, especially, and this is getting now way ahead of the game here, but it's important to look at this. This is what the market's looking at. This is US winter withdrawals. So we're looking at this. Let's look at this 3167. Let's just say we hit that 3100 level. And then we start having one of these winners here again. And you see the last couple ones have been there, but normal winter has been around 2300. That means puts us under 1 TCF of gas. That's a very dangerous level to be at, where we could be fighting for those gas molecules with the European countries and the LNG that's going out. So don't ship, where LNG suppliers have a choice of whether they want to load those ships up and go get $30 or keep them here and say current prices are at $9. So that's the risk. That's why the markets are moving. That's what's setting a lot of fear on the market, is this situation right here, this scenario. Hot summer and then a normal winter. That puts us at 900 TCF. Yeah, 900 BCF. And so now let's just talk about a little bit about the production underperformance that we've had here so far this year. We've ticked up a little bit since last month. We're at 95.2, but still below this 97.4. And really, a couple reasons why. One is investment's not very popular right now. It's not within those ESG sort of guidelines that pension funds, banks, everybody want to throw money to invest in. And it's also just, for that matter, just the drillers and producers are sending money back to the shareholders because they understand it's not popular. And there's other reasons as why too. One of them is lack of new pipelines. Let me give you a little story here real quick. There's a pipeline called MV Pipeline from Marseilles going out of the southeast. It's right around 2 BCF a day, decent sized pipeline. The pipeline is 92% complete. It was expected to be completed in 2019. Meantime, this has been held up in court battles. And this has held up completion. Meanwhile, the thing's been also at $3 billion in cost overruns. So this pipeline's not getting built right now. Who knows if it's going to be finished? It's being held up for regulatory purposes and in courts. And, without a pipe to go out, there's not much need to, drillers aren't going to really invest if they can't get that gas out. So we need to get these pipelines. It's important. And relatively speaking, these pipeline, they see this, they witness this, they see the cost overrun, they see this as now a money loser to finish the pipeline pretty much, and they see the battle that goes on. So there's not much, effort can be put into putting in more pipelines and getting this gas to LNG facilities and getting it all throughout the country. And secondly, there's also a shortage of resources right now, workers, steel, etc. And here's a powerful chart here. This shows really the estimates of and projections of supply demand growth in natural gas. This is BCF a day through 2026. Supply, we got a minimum estimate of 9, a max estimate of 16, demand 1524. You can read the slide here. The thing that I want to point out is look at the best case scenario, the scenario that has us equaling out supply and demand is supply hitting the maximum and demand hitting the minimum. Anything else, those prices at $4 are seriously $4 or $5 gas in the farther out years, especially in the $4.50 area for 2025 and beyond. Those are underpriced. The market will react once the prices hit a level that they will put the investments in to do this. But this is where big issue here. It is 16 and 15. That's the only way we equal out. So we have to have this rosy scenario happen for this to even equal out. There's a pretty good slide, and any customers that are debating whether they want to put any hedges on in those farther out years, this is a good slide to show them. Some other market developments we have going on include a solar panel tariff pause. This is just for 2 years. They've last month I think we talked about there was a solar panel tariff issue going on and just stunting us getting really the solar panels we need. And so there's just a pause recently this week proposed by the Biden administration to and it'll likely get through to pause the tariffs for the next 2 years, exemptions on them. And That's going to help bring some solar panels, hopefully back into the system here. There's potential negative capacity reserve margins in MISO, so brownouts in MISO are very likely this year. And that's, really the main regulated market there in MISO is, of course, down in Ameren, Illinois, but it's something to keep in mind because there is import capability there. And again, same thing, power will flow into MISO if there's those issues from neighboring PJM and such. Drawing supply is constrained. Lead time right now for steel pipe equipment, compressors, that's as long as 2 years. So yeah, you can't drill without that stuff. And there's lead time on that for 2 years. So that's one of the other big issues that we have going on. High coal prices continue. It's about $10 plus equivalent, $10 gas price equivalent to coal prices are. This was that thing that we've talked about before. It's when it's at $3, when gas prices were at $2.50, $2.60, and coal is around $3. You can always say, oh, coal prices don't move. Once that gas price is above $3, and there's going to be all of a sudden a bunch of gas demand will fall off. It hasn't been the case. And again, coal prices and similar sort of fundamental supply and demand issues going on there as gas. And finally, here's a question. Will Russia bomb European LNG import terminals? Something that I've been working on and looking into, and what the probabilities are, we don't know. There's so many variables right now that are just totally, so many questions and so much volatility and scenarios that can happen that we can't even make these guesses, but will that happen? And a lot of people's knee-jerk reaction then is, oh my God, that's going to be bullish for gas, anything that in a war cause situation. But really look at it all, it's most likely this would be bearish for U.S. prices, and in fact, it would be a pretty dramatic event and potential on the bear side. We're not sure if it's going to happen, but just want to put one more thing out there that could cause a drop in prices. And the reason why, because obviously if the import terminals aren't working, we're not exporting to them, and all that gas is just back into our coffers here in the U.S. and for our use. So this is really, that's the only real bearish scenario we have out there. That's what it is. But that's what's going on. I just want to put it all out there. That's a possibility as well. And finally, let's just talk here a little bit about some strategies again. Number one, and it's just important to have a strategy. It's important to be disciplined, not just based off of hope here. This is it's always like to say, if you're a company, a manufacturer, a school, a government building, museum, hospital, if you are expecting to be in business in 2024 and 2025 and beyond, and you do not have a contract for that period, anything that's hedged or anything, you are short the market. You're basically saying you think prices are going to go down, and that's the bet you're making. It's important to have a strategy to manage that short position that you have. Very, very important to risk manage that. And hope, as we like to say, is not a risk management strategy. So be careful in that. So number one, be disciplined. Consumers are not taking a long position, they are covering a short position. Number two, set a strike price. Setting a strike price can increase the chance of participating in a market dip. If we hit a down market for a few days, as we've had, it's not going to last long. So be careful, be set, be ready. You're not going to have time to go probably have a conference call and a committee meeting and send it all the way up through and see if we can get a contract signed. By that point, the prices will be back on new highs. And finally, hedge something. Just hedge something. It's important to get some sort of position out there. If prices go down, you still benefit. If prices go up, at least you have something hedged. And that pretty much covers with the market update. And now I'll pass it back over to Allie for ESG overview.
Wow, thank you, Scott. That was that's terrifying. When you think about where prices could really go, it seems like we're still in kind of a reasonable spot, and definitely some good value on those years that are a little bit further out. That's great. Switching gears a little bit, especially as prices start to rise, focusing on ESG or environmental, social, and governance goals for a company can be really, truly beneficial. ESG, whenever we're talking about it, we're really referring to that environmental part. The energy usage, we're talking about carbon emissions, we're talking about green energy initiatives, sustainability, and energy efficiency specifically. Some of these energy efficiency pieces that you guys can see referenced on this left-hand side here are around usage and efficiency. What efficiency does is it decreases the number of kilowatt hours flowing through your meter. This is a different version of cost control. With traditional procurement, we're looking at exactly how much every kilowatt hour costs, and we're trying to get that into the most cost-effective position that we can, helping customers to manage our costs from that perspective. Energy efficiency is a different way that is even more effective whenever your per kilowatt hour price is higher, right? Because the more kilowatt hours you can stop yourself from using in the first place, the bigger the savings opportunity there is. When it comes to efficiency measures, some of those include LED lighting retrofits, some of those are smart thermostats and HVAC controls. Some of those are building management systems if you want to automate any portion of your operation, whether that's lighting, mechanical, anything, things of that nature. And all of these are items that Box has resources to help. As Scott said, our supplier portfolio and our relationships are not just limited to our supplier partners. And even then, several of our supplier partners have offerings inside of the energy efficiency space where they can bring in a team and even potentially finance the project if you're interested. So this is a hot item right now and will continue to be as we see rising per kilowatt hour and per therm prices. Today, we're going to focus a little bit on community solar. This is an awesome product that's a little bit newer, and especially newer to those of us in ERCOT, where we don't necessarily have a program yet, but we are a nationwide energy broker, and there are several areas in the United States, mainly Illinois, Massachusetts, Connecticut, and New York that have very, very competitive programs where they have many developers setting up solar farms and who are able to take on subscribers. So for those who don't already know and aren't already familiar, community solar refers to a local solar facility that's owned by multiple community subscribers. Those subscribers receive credit on their electricity bills for their share of the power produced, which essentially the intent is to offset up to 100% of your regular consumption with the clean energy produced by that grid. The benefits here are some of them obvious, but here we go. Supports clean energy and development of renewable generation assets. In general, we want to see small and medium business customers, especially those people who maybe they've been interested in renewable energy credits. They don't necessarily want to double their kilowatt hour price, nor do they have the real estate available. They maybe don't have a good roof, or their roof is partially shaded and they can't access behind the meter solar panels, or maybe they don't want to deal with installing solar panels on their roof. That's fine too. But truly renewable generation has been out of reach for a lot of those customers, especially in the small medium business segment. So community solar is a vehicle that makes that really accessible, which is awesome. I also want to emphasize again, this is supporting local businesses and customer choice. All of these power plants and solar farms have to be within that customer's utility area. So it really truly is powering local generation, and it's empowering the companies that are building out this generation. That's more jobs in clean energy, as well as competitive benefits for your customers. As I said, this is available to customers who can't or don't want to install behind their meter, so it's accessible to a much larger number of customers. And number 4, the way this product plays in the market is that it's a guaranteed discount on energy spend. So rather than paying a premium for a renewable energy credit, these programs allow customers to have discount every single month on their spend, sometimes up to 10%, on average. And again, as we talked about with rising per kilowatt hour prices, that discount amount in terms of percentage equals more and more dollars and cents as your per kilowatt hour price rises. So this is really important. It's a great value for your customers. Let's go through a little bit just ABCs, how 1, 2, 3 is how it works. In general, your solar farm is going to generate your clean power. It's going to then introduce it directly into the utility distribution grid. So we don't pay any big transmission prices for this, just the local distribution. The subscribers then pay the solar farm based on the electricity generated from their share of the farm, again, offsetting up to 100% of their regular consumption. And then the solar farm works with the utility to apply credits to the subscriber's monthly bill, which it reduces their charges overall. Again, that discount can be up to 10%. And something that we'll talk a little bit about is that these programs really are highly regionalized programs. They're programs that are set between the state, the local utility, and the developers. So the rules are a little bit different state to state, as are the programs and the options that are available. Again, those 4 areas that we mentioned are Illinois, Connecticut, Massachusetts, and New York. Those are the ones where we've got multiple programs available to you. I want to touch on the billing piece, just because in most cases with straight procurement, we have either a dual bill situation where you're seeing your supply on one bill and distribution, transmission, taxes, everything else on a bill from your local utility, or you're getting one bill that combines those charges. It's either one bill from your supplier passing through transmission, distribution, taxes on the supplier bill, like we have in Texas, or vice versa. In many other markets, your utility will bill you and pass through charges from your supplier and show you that supply cost. When it comes to community solar, again, those solar providers work very closely with utility companies to monitor how much electricity that solar farm generates overall, and how to allocate that between their subscriber customers based on, again, their general consumption. In most cases, with most programs, again, this varies state to state, can vary utility to utility, you'll receive 2 bills every month. You'll get one from your solar provider for the renewable energy for your share of the farm, and a discounted bill from your utility. The sum of these bills will be, on average, 10% less than a customer who does not participate in the community solar program. So again, some great value there. Now, as I've said, we have a lot of different markets here that are available. We've got 4 that are really, really hot right now. We've also got more that are coming on. Certain states started the regulatory processes for these programs, I mean, years and years ago. I know Illinois just recently, over the last year or 2, has introduced new initiatives where some of these programs have become more viable. It's still a relatively new model with evolving options, and as more states introduce these programs, as more utilities start fighting for them and seeing that the power of customer choice and the value that they can offer to customers, we will get more and more. But again, whether it's through our existing supplier relationships or whether it's from people outside who maybe don't do procurement, who are not selling supply contracts, they're really just offering community solar, Box has those relationships. We have those resources. I think combined energy experience in this at this company is I mean, well over 100 years of industry experience. So we've got access to multiple programs. We will keep a very good finger on the pulse when it comes to these programs rolling out, whether that's a new emerging market. Again, we operate in every deregulated market. We've got those existing relationships, or whether it's a brand new supplier or service provider who comes into the space. We make it our business to know. So please, if you're interested, contact your account manager, contact Box to hear more about program availability. I think that's it.
Thank you, Allie. That was very informative. In fact, we have a question here for you on this, and it's Jim asks, is there a minimum maximum size for community solar?
That's a great question. Right now, it really truly depends on the state. Some states are really limiting this and the opportunity to participate in community solar to the small medium customer segment. So we're looking at, for example, I think we've got a program in New York right now where the max demand is 25 kW. So really this is appropriate for your small and medium customers. In other states, it might not matter, but those larger customers may also qualify for a little bit different programs. Maybe if they're a larger customer and they do have the roof space to allocate, maybe the better thing is to install behind the meter and to get them an even longer value proposition and something that takes over the whole per kilowatt hour cost. It really truly depends on the customer, but in general, we're looking at the small medium business segment.
Oh, thank you. And it's just another reason why to get in contact with us. We can really help you, walk you through the steps and give you the pros and cons of every option. Another question here that's come through, and I'll answer this one. What are the chances of Ukraine and Russia coming to a peace agreement? I'm not a political science expert, and I've read on it. I think we've all read on it. Who knows? It's really, and that's the whole thing, is this market, up until really the last year, it's been pretty easy to kind of read into the fundamentals and get them and lean into them and come up with some probabilities and things. And there's a lot of things that are really truly unpredictable right now. And that's the only thing I can predict is this is going to continue to be unpredictable. What's going to happen? Like I said, that could happen. There could be bombing of import terminals. There could be, Russia could just turn off the spigot to all of European gas, which would be extremely bullish. We could have a cold summer, a hot summer, a normal summer, a cold winter, blah blah blah. It's all unpredictable, but we're really, the chance of that, in my view, if you made me make a choice in it, I think it's going to continue to stalemate, a long battle will continue. I don't think either side's going to really give in, especially I don't think Putin's going to give in on this. I think he is bound and determined to prove his point and take as much Ukraine as possible. So, and then one last question we have here is how much LNG is coming online in the next year? Great question here. Sorry I didn't go into it earlier, but yeah, we're looking at around maybe another 1.5 to 2 BCF a day coming on within the next year. There were just in the last 2 weeks, another terminal that was funded and is going to be built within, got expected to come online, I believe, near the end of 23. That's going to be another, could be another up to 3 BCF a day, and there's more kind of out there getting funded because of the prices right now. These facilities cost $13 billion to make, so it's not just opening up a little lemonade stand and like hoping people come buy lemonade. And if they don't, oh well, you just bought some extra lemonade. This is huge investments, and they need to have for investors to come in and they're not going to build them on spec. They actually want long-term contracts, and those prices are hitting. We definitely can get the money for them. So we expect more to come on. Sorry, just some other questions on here. We just don't have time to get to. Hopefully I can address and I'll answer them and get back to you one-on-one. So moving on here, 1 second here, let me see. Yeah, moving on. Just want to talk real quickly about our strategic solutions we have. And, we're really looking to providing price charging more secure price options for larger customers. And large doesn't necessarily mean 10 megawatts. It's, really 500 kW and above. And somebody's go down farther, of course, community solar we touched on, even some on-site stuff. But really, we'd like to go in-depth contracting usage analysis. We have expertise in here in-house, what to look for in the contracts, how to help you, what's negotiable, and really get down to getting the best contract terms available at the customer level. And we also have usage analysis capabilities now. We are just rolling this out. We have the system in place where if you are interested, we can have your customers' accounts on with full usage analytics. This is going to be coming out real shortly, some messaging on this to our broker consultant community that's on the line right now. We have this capability, and it goes all the way to the customer level, and it's incredible stuff. It's great stuff. It even goes as far as doing automatic auto AI behind it, artificial intelligence behind it, like utility bill audits. So it's awesome stuff. Please utilize it. Custom proposals and presentations, we get into really what's needed out there for that. Custom pricing solutions, we come up with the best product ideas, best way to kind of get priced out. Demand response and management, we have a demand response program, we have it here, and really demand management as well, which is a big portion of the utility side of the bill. Target pricing and recommendations, we're here to help you with that. Community solar options, we just discussed it. Ellie just discussed that. We've got a tremendous amount of resources. We're building out our database on this. We're here to help you, any customers that want to get into that space. RFP management and execution, we can write up an RFP for customers that need an RFP, that want to do a formal kind of RFP route. We can work on that and execute the whole thing. Market timing and knowledge, and again, on-site solar analysis. These are just some of the many services that we offer. Our strategic solutions team is here to bring these elite level services to customers. Contact your account manager to get connected with us. And that's really all we have today. Thank you. Recording is going to be sent. Please share with others. And really hope wish you guys all having a great start to your summer here. It seems like it's been going on, especially down in our Texas listeners. We've had like the warmest Mays on record. Summer has already started, but yeah, summer's getting started here. Have a great start to that, and we'll talk to you guys next month.
Yep. Thank you, everybody. Have a good one.